Good morning, ladies and gentlemen. A very warm welcome to one and all for the second day of the Price Action Trading Level 1 course, which is a part of the I3T3 Mega Webinar Training Program. So this is Ashok Devanampriya. Kindly go through the disclaimer so that we can move onwards. All right. So the topic of the day is the key enhancers. Okay. So what are enhancers? Enhancers are those which helps you to be on the right side as much as possible. A trader should not trade all kinds of zones. We all said that an RBD, a DBD, an RBR and a DBR, they are just zones. They need not be a demand zone or a supply zone. They are just zones, and after multiple confirmations they can transform into a demand zone or a supply zone. Okay, only specific zones which have high probability of success we will try to trade, and in turn that will help us to have a better win rate. And when we bring in multiple enhancers into our thought process, our edge will slowly keeps improving. And let's focus on those key enhancers now. Friends, a statement of clarification. In the process of journey of our learning price action, keep expectations low. This holds good for all beginners. If every one of them respects the principles of position sizing, risk and money management, I guarantee you there is no way, and there is no way you can lose your money. 99% traders lose money because of not following these three things. You can always trade without a strategy. There is a chance that you might win because nature takes care. But if you don't play with the right rules of position sizing, risk and money management, there is no guarantee you will succeed. And to start off, think with even a 30% win rate. Okay, I'm not telling everyone should take off at a 50%, 60% win rate. Nobody in this world ever had such a win rate on the very first. Nobody comes into the cricket world to hit centuries and what do you call the hat tricks in the very first match. It might happen once in a while, 1 in 1,000, 1 in 10,000, but in reality, if you look at the overall average, it takes time. Okay, so let's focus with a win rate of minimum 30% to 1:3 risk reward. That will ensure that we are always in the game. We will not lose your money. The reason I emphasize this is that people, all trainers will give all colorful rosy pictures in training saying 50%, 60%, 80%. Talking in a class is the most easiest thing anybody can do. When the trade comes into the real picture, that's where the challenge starts. Okay, have realistic, reasonable expectations. Okay, every one of us should do some back test to ensure that we have at least 30% win rate before we even start live. So which means I want everyone to do a back test and verify the methods and reconfirm there is a minimum 30% win rate, because we are looking at 1:3 risk reward. 30% win rate is like 3 3s are 9, around 90% win and 70% loss. Still we will be having 20% of profits in our table. And if we start there, we are still great traders, because there was a statement from the World Futures Academy. They said that if a trader spends 1 year Any fresh trader who comes into the stock markets, he trades for an year, and the end of the year, if he retains his money, he is a part of the 1% of the world. Okay, so there is a statement in this movie Three Idiots. He says, never go behind results, go behind excellence. So they in that he says, excellence के पीछे जाना झक्कड़ मार के सक्सेस पीछे आती है. So let's focus on learning as much as possible, how much ever possible. Okay, forget the money part. Okay, once you get the right knowledge and once you have the right psychological mindset, I'm damn sure you will win, because I strongly believe that is what is all trading about. Okay, not secret formulas, not holy grail, not special techniques. Because I know many great traders who have gone bankrupt because of their wrong position size. So the reason I'm saying this is, we are getting into the crux of the trading now. So in the next session, we will start on the flag limit zone trading strategy. Okay, so that is why these aspects are very important. Okay, I want to keep everyone grounded and set reasonable expectations to all, because I am, though I am a trainer, I love attending many classes. I don't have the ego of I am a trainer, why should I attend? Sorry, every weekend, wherever I get a chance, um, I will attend a class, irrespective of who the trainer is, because even if he is training us one slide which can be useful for me, the 5k 10k whatever money I pay for the day is not, it's not a big deal. And I love to attend programs, meet people, and I'm being an extrovert. And most of the times, these trainers are the culprits, because they give all colorful pictures. They don't show the bad pictures. How many times have you have seen trailer is fantastic, the cinema is pathetic, thugs of Hindustan? So most trainers are the thugs of Hindustan trailers. Okay, so we need to be extremely realistic, because market is very brutal. So I am telling, a 30% win rate with a 1:3 risk reward will keep us in the game once we start. So let's start with a minimum 30% win rate, and from there we will take off towards 50, 60, whatever. But our mission is to do 50% win rate 1:3. That is our mission. But on the day one, we cannot do it. Even with 25% win rate, friends, we will not lose our money. 25 threes are 75, the profits are 75%, and all 75 trades are gone, which is loss is 75. So we land up in 0-0. So all that we need to do is to ensure that a minimum of 25 win rate is confirmed on the day of the first trade. So before I take the trade, I should go back and test at least 100 trades and reconfirm that the win rate is 25 and more. If it is 25, I break even. If it is 30, I get 20% return. If it is 40, I'll get 40% return. If it is 60, I get I'm sorry, if it is 50, I get almost 100% return. And we deeply get into the concepts of risk and money management, the last module. That is the module of transformation, and the true learning happens there. Okay, so Malappan will come to that. I'll spend a lot of time on this concept. There are multiple psychological concepts. I will go deeply into one by one, so you don't have to worry about it, because I have kept one full day on trading psychology, the concept of money management, the concept of risk management, and everything. And we will teach you on how to do back testing also. We will do that. All right. There are 8 major enhancers in price action. One is the base formation, the departure from the zone, the time spent at the zone, and how far the price moved from the zone, the freshness of the zone, and every one of you have already learned freshness of the zone, and the gap up gap down formations, and you guys also learned it yesterday, the higher time frame scenarios, okay, the HTF analysis which we roughly did yesterday, and finally nested levels. These are the 8 concepts which we have to remember before deciding whether a particular zone is good or bad. Friend, the way we go to a fruit shop, the vendor says mango price is this much. So what do? We start picking each mango. We look around. We check for the softness. We check for any insect mark is there. If we check for any damage is there. Okay, we sometimes even check for the color of the mango also before we buy, which means it's not that every shop will have the best mangoes. We will go into a shop, we will pick the best mangoes. Similarly, every zone cannot be a best zone. We will check, we will verify, and if only we work on specific zones which make reasonable sense as far as the wisdom of price action. Now, the first enhancer is the base formation. What is a base? What is a base? We studied in our first session the momentum candle and the base candle. Okay, and the base, when we say base is and many times what happens, a zone can be at the base level, but what is a zone? A zone is a place where price more or less reversed. Okay, and the zone need not be the base alone. The zone can be the base including the part of the momentum candle, or there can be a zone without a base candle. We discussed that, the V-shaped reaction where price goes down and suddenly goes up, the bullish engulfing that we studied in candlestick charts. And I'm sure many of you don't remember the term. Don't worry about it, because I clearly told everyone don't care about it. Okay, the base is a point where maximum war happens. Okay, it is a point of reversal too, but there are times where there are no bases. That is fine, which we are aware. The kind of bases that gets formed at the bottom makes a significant difference to the success of the trade. Okay, let's look at this. In this example, price came down. There is a very good momentum candle. There is a very good momentum candle. There is a base formation and a good momentum candle, and then there is a base candle. That's okay. While coming in, the price came with lot of power. Suddenly base got formed and it went up with lot of power. And eventually what happened? Price finally came down to the zone area and it bounced. Look for the kind of base that is happening. Let's look at the second example. This is a much superior example compared to the first one. A momentum candle, a momentum candle, a momentum candle, a momentum candle, and a momentum candle. A lovely base candle. A momentum candle, a gap up momentum, gap up momentum. What actually happened? The sellers were dominating big time. They massively attacked, destroyed all the bulls all the way down. And the war between the bulls and bear happened. The bulls managed to bring down the pressure of the bears, and then the bulls pushed up the price. The push up was so lovely that it created multiple gaps when it is going up. So what does that mean? Who is under control? The bulls are in powerful control. I have marked the body and week, and I have, in this example, I have marked the body to wick. Okay, here also I can mark body to wick, okay, or wick to wick. Remember, I use both kinds of stuffs. I use both kinds of stuffs. Sometimes I also use body to wick to wick, because if the risk is small, I don't care. See, I being a trader, I do not get into very small stop loss games. Okay, I love to be a positional price action trader because I can play lot more lot sizes. I want to play 5 lots, 10 lots Ashok Leyland. I want 50 I want to trade 50 lot Nifty. So where will I do that in intraday? I can't do that. So I prefer to do positional. Okay, but remember this fact, these principles were holds good for all time frames, be it the monthly, the weekly, the daily, the hourly, 15 minutes, 5 minutes, 3 minutes, even 1 minute. The principles that hold good in a monthly candle in price action is valid even for a 1 minute candle. So don't ever think Ashok is only trading and showing bigger time frames. Sorry, Ashok can show anything. Ignore the time frame. I have 3 time frame, you have 3 time frame. That's it. But the foundation is the same. And one strong green bull candle dominated two bear bull candles. So then what happened? When price comes back, it kisses the zone, it bounces back. Small bases are always the best. All of you, do you recollect that a base candle can also be an extended range candle? A base candle can also be an extended range candle. A base candle can be like this. A base candle can be like this. A base candle can also be like this. Okay. A base candle, it can also can be an ERC or an NRC, but a narrow range base candle is a perfect base candle when extended range base candle is a bad base candle. How about momentum? What is the good one? What is the bad one? An ERC momentum candle is the best momentum candle and an NRC momentum candle is the worst momentum candle. The opposite is true. Why opposite is true? Because the momentum candle is opposite to base candle, where there the body is bigger, here the wick is bigger. And a Morobozu can be the diamond in the momentums, where you don't even have wicks. And in case of such great zones, you can always ask me, Ashok, can I take multiple trades at the same zone? Generally we saw FTB, 2TB and 3TB. Okay, I always say do not take anything more than 2TB. 2TB is second time back. So price went up, it already came once here and it came twice. Second time back, it has done the job. If it comes third time, it's likely to break this zone. Observe this phenomenon correctly. What happened here? What happened here? Price came and stopped here. Second time, price came and stopped here. Third time, if it comes, it will stop here or even here. When the price came once, it kissed and went somewhere. When it come second time, it did deeper penetration to eat lot more deeper pending orders because it came second time. The third time it goes, it further make a deeper hole. These are the classic bases. Deven sir, is it clear? Or you want me to repeat once more? Okay, so there is one question. Sir, is it a reaction zone? In this example, we have a zone. Okay, if you want to know if it is an authentic zone, where do we go? Friends, if we want to know if it is an authentic zone, where do we go? We have to go to the left. You should go to the left and check by any chance if there is a zone which is matching this particular zone. If it matches this particular zone, then this is not a original zone, this is a reaction zone. So in this example, there is nothing on the left, so you assume this is an authentic zone, whereas this is a reaction. This is a reaction zone. Drop, gap down. So this is a momentum if it is a gap down, correct? So this is drop, base, rally. So this is a reaction zone to this authentic zone. There's a lovely question. Do you mean to say that the proximity of stop loss is more in case of Doji's NRC candle at bay? Exactly. In case of an extended base candle, what is the problem? Your stop loss increases. Simple. Very simple. Why I am telling the base candle should be small? The smaller the base candle, the smaller is your risk. Why? You are taking trade. Where are you taking trade? This is the proximal line. This is the distal line. I want my stop loss to be as small as possible. In this case, I took a body to wick mapping. If I take a body to body, my zone is much bigger. So naturally, if my base is small, you don't have to worry about whether it is a body to wick marking or a wick to wick marking. I can directly mark wick to wick. I can get that aggressive entry also with a small stop loss. Okay. So these are all same. We are not talking anything rocket science. We are talking the most common things only. All that price action. You need to bring the key jargons to make it colorful. So what is an authentic zone? Authentic zone is a new fort where no warriors have gone and captured ever. It's a new fort that is created, or the new, what do you call? Yeah. Reaction zone. Somebody went into that fort to capture. They had a war and it reacted. And all the FTB, 2TB, 3TBs are all reaction zones. All right. Can we move on to the next step? Let me clear all the examples and let's get into the next story. What would happen to bad bases? We saw very good bases which gave phenomenal reactions. Now let's see what the bad bases is about. Now let's observe this phenomenon. A beautiful entry. Momentum, 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 momentum. But a huge base candle formed. What kind of a base candle is this, friends? What kind of a base candle is this? It's an ERC base. It's an ERC base, extended range base. The base is very big. Okay. Then it's not only an ERC base, there are 1, 2, 3, 4 bases that were formed. Problem number one, there is one base, which is an ERC base, which is a turn off for me. Why it's a turn off? If my ERC base is big, my stop loss is also big. In all the examples, friends, where are we entering? We are entering here. This is a proximal line. Entry, this is a distal line. Exit. We already spoke about that in our zone marking process. We always enter at the proximal line. We always exit at the distal line. And the proximal line can be either a body to wick marking or can be a wick to wick marking. Sometimes stop loss get hits and moves in the direction of method. We have to curse our fate, take the stop loss, respect it, and move on and analyze why that stop loss hit. We can do that. We can go deeper into the story and figure out why that faking happened. Now, many times what happens, people keep the stop loss at the distal line only. Some people will take a minor cushion also. Okay. Some people take a minor cushion also. I prefer to take closely away from the distal line. Generally what I do, I take 20% more. Generally what I do, I take 20% more. I take 20% more. For suppose the stop loss is length is 5 points. Let's say the proximal line is 95, distal line is 90. Instead of taking the distal line 90, I take 89 as stop loss, which is 20% more. Sometimes what happens, we have to go back and check if there is a level over level. If you go back in left, the below, if you go analyze on the left side, there can be a situation. Okay, but most of the times I don't cry about fake out. Fake out is fake out. What do I do? Now, whether 20% a secret formula? No. Even if it is 20%, sometimes fake out can happen. It go down to 30%. I stick to a number. You stick to a number. And remember this, friends. Not that it is super intelligence, not that you are super talented to take a 20% stop. What if you don't take 20% up every trade? How many fake outs happened in 100 trade? Now every one of you take this as an assignment. When you go and check the behavior, when you go and check at least charts, cross check how many fake out happens. Let's say 10 fake outs out of 100. But in all 100 charts, if I'm taking 20% extra, imagine what would happen in the overall loss in the long run. This is what is called as excess insurance. You have an insurance for bumper to bumper insurance for your car. You go and again buy another insurance for a car, assuming that what if the cost of the damage is more. Okay, sometimes people even take ATR based stop loss, but I don't think we need to do all that. We let us stick to distal line. Maximum just go to look for a level over level, zone below the zone scenario. If there is a zone below the zone, always try to take the lower zone as stop loss. That's it. Now, in spite of this kind of base formation, price went up, it kissed once. I'm sorry, it went up, kissed once, kissed 2 times, 3 times, and it went up. Luckily this worked. In spite of a bad base, this scenario worked, but it doesn't work every time. It's an accidental success. Let's not take credit of bad things. It's accident. So markets many times rewards by accident also. Not that market is our enemy all the time. So many times accidentally we'll get into the direction of the market. When you trade multiple, when you do hundreds of trades, the theory of luck, the theory of averages will take over and you will start seeing results. There is an interesting statement. Sir, instead of taking the close price of an extended base candle, can I take the opening price? Since this is the statement. Can I take the opening, say, which will bring down the risk? Yes, that's a creative thought. Do that. Our principle is very simple: low risk, high reward. Whatever scenario gives you lower risk, go for it. There is no universal rule. If risk is more, jump, skip the trade. Why should we take every trade? You don't have you are not a salesperson to achieve your target that this month I need to do 100 trades or else my appraisal will not be good. Some people can also take the stop loss, the proximal line at 50% of the ERC. They will also take that. Now if you ask me, Ashok, which is the best one, I say there is nothing that is best one. It's all individual appetite, individual confidence about the trade. Okay, so we try to avoid such things. The best is to avoid. Why should you force yourself into a trade? We don't have targets anyway. There are hundreds of opportunities that arises. So is there a number of bases scenario that we should avoid? Generally, the universal rule is the number of bases should be as less as possible. Most of the times, if there are more than 4 bases or 5 bases, we escape, because price has spent too much of time there. Where is the momentum? First of all of us are retracement traders. Everyone agree or not? What do you mean by a retracement trader? Retracement trader is like this: price has come down, price did a base and it has bounced back, and this is a zone. Now when price slowly comes to here, okay, I expect this price to bounce. Why it should bounce? Why it should bounce is the institutions took the price up. When they took the price up, they didn't get proper filling. Their orders were not filled. There are a lot of pending orders at this zone. There are a lot of pending orders at this zone. When price come, we expect that pending orders to get filled and it get bounced. That is the bottom line. The zone should be like a fire. Touch the zone, you're pushed away. If you're not pushed away, there is no fire. If you are not pushed away, there is no zone. Remember, in spite of that, many times price can go up because it could be new orders which can come from nowhere. We are not waiting for new orders to come. As price action traders, we're looking for the current pending orders to act now in our direction. Okay, friends. Now we spoke a lot about this. Let me erase all the drawings. Let me go to the next example. Now look at this base. Now what happened? This is another interesting scenario. There was a momentum, 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 momentum. So lot many momentum candles on the downside. So bears are in absolute control. And suddenly there was a war. The price made a bottom. And this is what kind of a base? It is an ERC base. An ERC base is not a good base because the risk in case of an ERC base is very high. And somebody was saying, sir, can I take open? You take open, you take close, the risk is more or less the same only. What will you do now? Sir, can I take 50%? Okay, 50% is also big. What do you do now? Now you can argue saying, sir, but base, there is only one base. But remember that base is a one base, but the fight went longer. There is a fight everywhere, no? There is a fight at every point of the fort. The fort was not captured elegantly. Throughout the inside the fort, there is a big war. There are multiple fights. The fort was captured instantly and moved out, but how it was captured is also a matter of concern. So we are not telling we should not trade these kind of things. See, this also worked. See, immediately a strong momentum candle came. This is a base candle, but this is still a momentum candle. Why? This is the base is also considered as momentum. Correct, friends? Recollect the base. Any base with a gap up is a momentum here. Series of momentum, price came down, kissed once, kissed second time, kissed third time, kissed fourth time, kissed fifth time, and then it bounced. I call this luck. This is not because of work, hard work. This is just by luck. I don't believe in luck. When it does these kind of things, it's crystal clear. There is that base is not good. So what is the moral of the story? The moral of the story is we must focus only on good bases and do not give lot of weight to bad bases. Avoid ERC bases as they extend the risk amount. That is the learning today. So we are not telling ERC bases are bad. All that we are telling is ERC bases results in a bigger risk. And we are traders who want very small risk, more reward, and hence we want to avoid it. Even if it's a good trade, a good trade with a big risk is worse than a bad trade with a small risk. Remember yesterday's chip statement. If you don't bet, you can't win. If you bet a lot, you will not stay in the game. You will consume your chips. Can everyone give me a check? Anybody having doubt? Anybody having any doubt on an answer one? We will get to the next stuffs. Only people who have doubts buzz me. So Arvind is asking, can you show backtesting of your setup which you do trading? We can do that, Arvind. We can do that. In intraday positional trading, to verify the zone is authentic or not, how long I should go back? Go back for how much, however you want. You go 1 year, 2 year, 5 year, 10 year, 20 years also. Price action is valid. And remember, you are doing an intraday game. You are doing a positional game. Generally, if you go back in few weeks or few months or even a few couple of years, you should get a reaction point. If it is not coming, what does it mean? You are at a lifetime high. That's all. At a lifetime high, every zone is a authentic zone. At a lifetime high, every zone is an authentic zone and also a fresh zone. Perfect. So multiple bases is also a bad scenario. Not only the base, the length of the base, number of bases are also critical. Okay, more bases will signify that there is a more fight for a lot of time. If Australia goes and kills Kenya, who is strong? If Kenya is beaten in 30 overs, but when they fight with India, they will win in the 49th over. So what does it mean? Both are equals. So the next match they play against India, India will fight back. But the next match they play against uh, against Kenya, they will again win. So we are looking for a scenario where Australia is fighting against Kenya. They come, they kill, they go. They come again, they can easily kill because that fellow is weak. I want a weak enemy. A small base is a weak enemy. The less number of base is a weak enemy. An ERC base is a strong enemy. The more bases is a strong enemy. Apply, think what is happening from a price perspective. A long base means there is a big fight happening. The enemy is not giving up. The enemy is not dummy. More number of bases means one. More time you are taking to kill the enemy. What does it mean? If you are taking more time to kill the enemy, that means enemy is strong. Okay, whenever the price is at a lifetime low, there can be more authentic zones also. And one more standard statement, you find more authentic zones at RBR and DBD levels. There is less chances of authentic zones at the DBR and RBR levels because RBD levels because they are reversal patterns. When there are too much of reversals here and there, what will happen? You might not find the authenticity there. Most of the authentic zones happens you all lifetime high, all our lifetime high, RBRs and DBDs are all authentic zones. That is the standard statement. We can program it also. The lifetime high and the lifetime low, lifetime high RBRs, lifetime low DBDs can be mathematically easily programmed because by default they are all authentic zones. Next thing is departure. The departure is another critical enhancer. The departure signifies the momentum at the zone level. It also tells us about the pending orders that exist at that point. If it creates multiple bases along the path of departure, it is a cause of concern. What does it mean? Now what we said, the fort is a place. Okay, now fort is the zone. Okay, again think, imagine a warriors fighting. So one bunch of warriors came from the top, the sellers came from the top, they attacked the fort. The buyers defended the fort. The buyers are so weak, the sellers killed all the people in the fort instantly, very soon, with less effort, less time. Okay, and they just moved out. When they moved out, what does it mean? They are aggressive. They are not relaxing at that fort. They are again running up to capture the next fort, which means they have more strength. The enemies are not satisfied capturing one fort. They will go, they will also think about capturing next fort. So when price comes down, forms a base and reacts strong with momentum, what does this mean? There are lot of turbo, the lot of charge, lot of energy, lot of strength in the bull. So when it comes next time, it will again bounce. Why? When price pushes hard on the upside, what does it mean? The institutions are unable to fill up their orders. When the price comes up, it has to react. There's nothing like it has to react, it must react. We have to say there is high probability of reaction, because the moment we say must react, people will look at more lots, so that the confirmed trade. There is nothing like confirmed trade in this world. There is nothing like guarantee trade in this world. What anything that is right can go wrong, and anything that is wrong can go right. The rule of stock market is its probability only. Let's look at some examples, friends. So there was a base formed, and see the rejection there. Strong momentum down, strong momentum down, strong. uh, though it is a gap, but if you take the gap, yeah, the whole gap, no, sorry, this is not this portion cannot be taken as a gap because it is a gap down. Okay, so see the rejection kind of fall it came. The momentum was very, very strong. Now people can ask me, but Ashok, the arrival is bad. That would be a very good question for you. Okay, that's when we will look at good arrivals, good departures, good bases. When all three are in sync, then they are very high probability say patterns. Then what happened? Price made a stop there, it further went down, it made another stop below, but when it came up, it kissed that particular zone and it fall further, because the departure was so strong, because there were strong orders here. And remember, these strong orders can be new orders also. It need not be the old orders. Many times you guys think, when though come on, the bases are more, the arrival is also bad, but suddenly there was a big move. It is because there can be new bunch of orders, a new bunch of enemies came. The enemy which you are already fighting the war need not be from two people, the war can be from multiple people. The third party who came in came with a big number of people. Okay, look at this example. This is a classic example. This is a classic example. This worked perfectly. I'm sure I will not uh, I'm sure I will not get any complaints here. A perfect gap up. A gap is also a momentum candle. A perfect momentum candle. A base and a solid drop and drop. Yeah, you can bring one argument telling, sir, this is not a base. Sir, this is not a base. What is it? It is not a base. I know, but it is the V return. It is more stronger than the base. So what did I do? I took the body, the end of this week to the end of that week. The 2 weeks I joined. Friends, remember, in case of joining, I had shown this, that when you don't see a base, you can take, see, generally people even take this, okay? There's nothing wrong in it. People even take this one as the zone. The top of this until this point, they will take this as a zone. I don't like it. Okay, some people take midpoint of that candle, which is 50% as base. I'm sorry. So can I do an undo? No, there's no undo here. Okay, this as a base, but I prefer the wick to wick. That is a classic entry. See the kiss trade, and you can say, wow, this is fantastic, but there is every chance that this may miss also. Luckily this time wick to wick gave a trade. You might miss sometimes. Okay, remember this point. If your risk is low, your entry might be missed. If your risk is, if you take more risk, you might get an entry. That's your choice. Okay, now what is the universal method? Come on, that's you should decide as per your appetite at that moment of time. If you have made lot of money, go to aggressive trade. If you have been losing money, be conservative. Keep losses limited. Remember this point. A trader who bets less money when he is losing and who bets more money is winning is a fantastic trader. I learned this from Van Tharp, and I follow the same principles. You see a very aggressive Ashok when things are working well, and when if trades are not working well, I'll be very cautious. I'll go weak. Not in terms of mindset and behavior. I know there is a tsunami coming. I should bend. I know I am nobody. When even Sachin Tendulkar, even Kohli, when their form is bad, what do? They'll not try to give up their wicket easily. They'll play defense. They try to be in the game, try to get back their form. Okay, it's a trade-off between the risk and the strike rate that you want. And there is a question, Ashok, there are 200 stocks. How do I scan? This is price action. Okay, if you are an intraday trader, you cannot trade all 200 F&O stocks. I know intraday traders who trade only 10 stocks. Okay, so everyone cannot trade 10 stocks at a time. You need to start trading with one stock, two stock initially. Once you start getting the grip of the game, slowly you can increase to 3, 4, 5 and so on. No intraday player can trade more than 10 stocks. I know. For positional trading, life is easy, friends. Life is amazingly easy because I have we mark them once, and the markings don't change for weeks and months also. Suppose you go on a monthly chart. Okay, you go on a monthly chart and you make a mark of a zone. For that zone to react or zone to break, it will take at least another 6 months, 1 year. A weekly chart will take another 6 weeks. A daily chart will take another 6 days, 10 days. So every day things don't change. Okay, positional life is easy, and in when it comes to execution, let me tell you this very clearly. I hate being in front of the system. I hate being in front of the system because I personally believe that a trader who spends more than 6 hours or say whatever the 6 to 7 hours in front of the machine, he is wasting his precious time. Instead, imagine if you are a trader who spends 30 minutes to punch the orders and spend the remaining 6 hours doing analysis and learning more. Imagine in your learning curve. You are learning 6 hours a day and 6 hours into 30, which is like 6 5s are 30, almost 30 hours every week you are getting, which means roughly 100 hours to 4 weeks, right? 100 to 120 hours per month, which you will be saving, and that time you can use for more learning, more improving the accuracy and precision and so on. And for all positional traders, I am building a semi-automatic robo. I can we can You can just set the entry, exit, stop loss, and the system will take care of everything. You don't have to even do it. We are building such a semi robo so that true traders will focus more on analysis than trading. And there is an amazing statement by Deven sir. He is telling, if you look for such best scenario levels and now coincide this with GAN levels, perfect. This is what I wanted to bring in the thought process. Now every one of you know the GAN levels. Every GAN levels are coming automatically. You guys are not doing anything there. Now you are asking me, Ashok, how do I play? Now if a GAN level is matching with a zone, that is double confirmation. Your price action is giving a signal and a GAN is giving a signal. So what I want to say is, you need to mark the levels. You need to mark the levels and keep it ready. And intraday people, I'm telling, it is hard work. Don't expect your anything to come that easily. If price action works, yes, price action definitely work. You need to spend time in marking the zones. I have many friends who mark zones every day after the market hours, and be prepared for next day. Okay, so which are the best stocks to trade for positional? There is nothing like best stocks to trade. You can trade whichever stock you want. Okay, you can trade whichever stock you want. Stick to one stock. Okay, stick to one stock and start practicing. You take Nifty, Bank Nifty, or some F&O stock, Reliance, Tata, whichever you want. Get a grip on that. Add the second stock, start marking, then tracking every only those two stocks every day, and third stock, and so on. So always watch for departure with very high momentum. Always watch for departures with very high momentum. Okay, so for intraday, how to select the stocks? Every stock shows price action. Every stock gives price action. Okay, you pick whichever stock you want. Wait for price action. This is not breakout chart. You are not looking for breakout. You are waiting. You are the tiger who is waiting for 4 hours for the deer to come to drink water, and you suddenly grab the same deer in 4 seconds. 4 hours of waiting, 1 minute of capturing. Action time 1 minute, waiting time 4 hours for the tiger for its prey. Similarly, all price action traders are those who waits for their prey. All of you, all the beginners always focus on just if you want to do intraday trading, every beginner, please focus on only one chart. Start practicing it. Start looking for trades. Okay, do not bet too much money. Do not even trade F&O. Go to cash segment. Bet only 500 rupees per day with a target of 1500 rupees. How many ever shares you get for that risk, do it. And we will talk about in our last um in the last program. Okay, so in that last module we only talk about how to bet, how much to bet, how to protect my capital, all these principles that I learned from all the 5 books of Van Tap, the 2 books of Brett Steenberger, and so on. So yes, Sridhar, a super trader is one of the books. That's one of the fantastic books I always recommend. Okay, so not only the base, the departure is also important. So let's clear all the erase. So what is a bad departure? What is a bad departure? Let's take this example. Momentum candle, gap up. So this is momentum candle. Okay. And then again this is gap up. So this is also momentum candle. Friends, is it clear? Base, departure. Okay, this is the zone. So what happened? It departed and again it created a base and then it came down. Now see, price can go, it reacted from here only, it didn't even come to this zone. So generally what happens when departure, if there are a series of momentum candles, life is easy. Series of momentum candles, then whenever it retraces back, the probability of reaction would be very, very high. These are all very common sense phenomenon. These are not rocket sciences. But only thing is, as traders, we tend to forget. So somebody asked, if possible, how do you trade this particular scenario? I will skip this scenario. I will not trade it. Okay. So people are asking me to repeat the whole thing once again. I am going to erase everything. Okay. I will. So what I am trying to say is, the price stopped here and there was a strong momentum candle. Okay. And immediately there was a gap up. The gap up is also a momentum candle. And from there it was again gap up. That gap up is also a momentum candle. Everybody knows if there is a gap, the gap is a momentum. We clearly discussed that and a slide was presented. I guess it is in session 2. People who don't understand, kindly go back and read the session. Now my request to every one of you is, once you finish the class today, go back to the basics of the last 3 sessions. Okay, go back and make simple notes and just make items. It's like a checklist. Okay, if you have the checklist, put it in front of your trading machine, and whenever you are trading, please keep an eye on that. Even if you ignore one rule, it might create one bad trade. Okay, now what happened? Momentum, powerful 3 momentums came. Okay, okay. So now one interesting observation from someone, this is also a base candle. Sorry, this is also a momentum candle. Okay, yes, agree. I have no argument. It is a momentum candle, but it is a narrow ERC candle. And since price stops there, I took that as the zone. Okay, then what happened? Price suddenly fell down and then created 2 bases. What is these 2 bases? And fine, suddenly fall. And those 2 bases, I formed a line. What is this? Drop, base, drop. Just that there are 2 bases, that's it. When price dropped, it went up, it kissed and reacted from here only. Naturally, it can react from any base, right? What after the 2 bases, suddenly the strong momentum candle came. What does it mean? Which means there was a push, there was a strength on the downside. It reacted. Now, if this comes back, it can react here. If it comes back, it can react here also. But the fact of the matter is, if the momentum candles are like this, okay, the way we got multiple 3 momentum bull candles, similarly the fall comes with multiple momentum bear candles, then such scenarios will have very nice win rate. It's all about probability, right? Okay, and let me tell you, many times what I do, if I am very strong on a moment, I will go and write calls. I go long. Okay, I buy the futures, I will keep writing calls, I don't care. Because if I'm sure of the levels, there are multiple levels which come, no, of course my position sizing will protect me. I'll keep writing calls until the price comes to my zone and I cover my calls, make a profit there and take the price up. So I will not give up a lost trade. Okay, this is a different way of approach. These are unfit for intraday. These are for positional traders. I will explain you guys again. Okay, so let's take the next example of the bad departure. This will help you. Okay, now let's see this example. Momentum, momentum, base, base, momentum, base, base, momentum. Can you see this? That's how it came. There are two levels of bases. Then when price formed a base and a strong momentum came. So arrival is also bad. Okay, arrival is also bad. And departure, only one strong momentum candle happens, and see the compression here. This is called compression. We'll talk about this in the subsequent slides. This is called compression, where there is abnormal fight, and this is basically eating all the pending orders there. Instead of that, if we had two great momentum candles upwards, we could have taken this level elegantly for reversal. When all the buyers are killed here, when sellers come, they come with lot of strength, so they might even break this zone and go further down. That is the problem. Okay, when a departure is simple, what is a good departure? A good departure is a departure where there are more momentum candles. A bad departure is a departure where there are excess amount of base candles. That's it. No big deal. Avoid departures with congestions on the way. When you are departing, you should not land up in hump. When you are traveling on a highway, if you come across a hump, your highway is bad. That's what is the departure about. Have an elegant exit without any disturbance. Keep moving freely on the upside. Okay. Now, let's talk about the third enhancer, the time spent at the level. The time spent at the zone signifies the amount of pending orders there. If the price spends too much time, it ideally means it is taking a lot of time to consume the orders. The fight between the buyers are happening at an equal rate. More time you are spending, what happens? If Australia is taking more time to win against the enemy, then definitely it is not Kenya, it is India. He is a stronger enemy. A quick move from the zone with least time signifies significant momentum. Go, kill the enemy, come out. That should be the point. When you do that, then we are strong. When price goes down to the zone, and if it suddenly reacts very fast, what does it mean? There is so much of pending orders there, and so it's pushed the price up. How many of you recollect the theory of 1 lakh pending orders, 60,000 consumed, 40,000 consumed, and so on? Remember that story. Take a look at this. So a beautiful momentum, arrival is perfect, a beautiful momentum, exit is perfect, and then price did a side and went up much above. It never came down. So these kind of zones are more powerful. Why? Arrival is good. Okay, base is good. What kind of a base is this? It is a V base. There is no base at all. So I took the midpoint. Friends, can you make out? I took the midpoint of the red candle. I didn't even take the wick to wick because wick to wick would be very small. So I took the midpoint, and it is my choice. According to my risk appetite, I'll take it. I'll have some risk in mind. According to the risk, wherever I want to enter, I'll enter. Okay, so it not only have a good arrival, it had a good departure and also a very good base. All three enhancers satisfied. And now look at this zone. Okay, momentum, gap up, momentum, momentum down, momentum down, momentum down, a quick V shape exit. Time spent is very small. All enhancers satisfied. So these kind of zones can always strongly react. Clear, buddies? Lesser the time, higher is the probability of success. Let's clear the mess. Now take this example. Strong momentum. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 bases came. And then a momentum and a momentum. And again price came. Price came to the zone. It amazingly reacted. No doubt. But whenever there are more bases, the probability of success is very low. We should not trade such bases. The time spent is too high. But in a higher time frame, base may be very few. How many of you remember that we took an example of drilling of candles? We found one momentum candle. In that one momentum candle, there was only one. All five were base candles, and only one base candle was a gap up base, and that became the momentum. So when you go to higher time frame, you drill down, you will get lot of bases. This is the beauty of price action. Many times when the risk is low, when the risk is very high, okay, you can go one lower time frame to go and check to reduce the risk. I'll show you with some examples in practical session. And if price comes near the zone and doesn't even touch the zone and reverse, what do? We have to wait. We have to just wait, because the deer has not come to the pond to drink water. What will the tiger do? It does waiting. The torture in price action is waiting, friends. The more you wait, the more you win. Patience is the key here. Then what about this one? Look at this lovely example. A strong momentum came. Okay, so strong gap. So definitely that is strong momentum. Again, see base, 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 drop. 1, 2, 3, 4, 5, 6, 7 bases are there. And out of 7 bases, number one, there are 7 bases. Time taken is more. Second, one base is an ERC base. And the zone becomes bigger. When price comes up, see, it broke that particular zone and hit our stop loss. Compression, 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 compression. Okay. And this price should ideally fall, because the whole thing is compression. All pending orders on the upside is eaten away. When we go to the advanced topic, we will talk about this phenomenon. Okay. So normally it is said that if there is consolidation and if breaks on either side, it will strong rally. No, it is not true. It need not be true. Too much time in the zone reduces the strength of the zone. That is the summary of our learnings from this particular slide. The enhancer 4. How far did the price move? Now what all we spoke? Number one, what kind of base formation is happening. Okay, number 4, how the price is going. Number 3, now we are telling how much time it is spending at the zone. Number 4, not only the type of departure, the kind of departure, now how far. So we are not, the key enhancer 3 is about what? Momentum. Momentum is what? The speed. Now fourth one is the distance, kilometers traveled. So I consider not only the speed of the vehicle, I also consider the distance the vehicle has traveled. Okay, the price has to travel generously away from the zone. It has to go generously. What is generously? Without much basis, without much of congestion, free momentum candles. The price should move a minimum journey of 1:3 to 1:5 times the total risk in the zone. If the price do not move much, a trader will not get a reasonable trade. When we say reasonable trade, we are looking at minimum 1:3 risk reward. We will never get such a good trade. And I prefer a minimum travel of 1:5 times. What does it mean? Let's get into the details. Now let's take this example. Momentum candle, 3 very small Chotu bases and a fantastic departure. Gap up, base, momentum. Okay, it's a fantastic departure. And the rule, according to rule, how much distance it traveled? Did it travel 10 times the risk that you are having here? At least here it is 10 times. So I am telling minimum it has to go 5 times. If the price doesn't go 5 times in the journey, then it's not a correct trade, which ideally means it has to elegantly go there 5 times, and then it can do sideways and further went up according to Wyckoff theory or whatever you say. But if, for example, let's say price went here and let's say it is consolidation here, what you will do? You will not get that 1:3 movement. Again there will be a resistance. Now see, till this point technically there is a base here, rally, base, drop. Let me do this. Let me mark that zone for you guys. Let me erase all the points. I'll take the pen again. Can you see this, friends? Rally, base, rally, correct? This is rally, this is a base, this is a rally. In fact, if you take body to wick to wick, there is a kiss. This guy kissed and bounced. Okay, now even if the price comes down, I am telling you there will be resistance here. Why? When price comes down, breaks the support, then what is that? What will happen to that support? SR flip. That support becomes resistance. And now does this give a minimum of 1:3? I don't know. So I do not want to take such trades. It has to go minimum 5 times to 10 times of the price. That is the meaning. The farther it goes, the better it is. Look at this guy. A classic momentum, a lovely base, and a fantastic gap down, Okay, so this zone is a lovely zone, and I took the wick to body. Then what happened? It has traveled away almost 10 times. Naturally, no? Our risk is only this much. Even if you take body to wick, it has gone more than 5 times. I guess this should be at least 8 times if I am not wrong. 8 times the risk that is involved, the price has traveled downwards. So when the price comes back, we will look for a trade. And there is a fake out, don't worry about it. Because in this slide, the intention is to learn that it has to go as far as possible before it comes back to the zone. All right, friends. I hope if there are any questions, shoot me, or else I will assume that you guys are understood very well. Need a strong movement which is minimum 5 to 10 times of the zone. Minimum 5 times. Minimum 5 times. The more higher it is better. Why 5 times? Nobody is asking why. Why 5 times? Because I am looking for 1 is to 3 times as reward. So if it is at least 5 times, there is high probability of me getting my 3 times reward, or else it might go and hit 2 times and come and back and hit stop loss. It can go and hit 1 time and come and hit stop loss. How many times it has happened to you? I entered there, it went up, it came down and hit my stop loss. Okay, in both the examples we see momentum gaps. All right, friends, I'm going to clear all the markings again, and let's get into the next one. This is a good example. So this is an example where we are trying to explain how bad it can be. So this guy is a bull candle because this is your candle. This guy is also bull. This guy is also a bull because this is your zone. Okay, and then it formed two bases and finally price dropped. Okay, so price went up. So price went up, two base, and it dropped. Correct. Now the base is big. Base is bad because it is an ERC base. Okay, and the price went down. Now my risk is this: how much time it traveled? It traveled probably two times the risk. How can I take this trade if it comes back? I will not get my 1 is to 3. Okay, I cannot take such kind of trades because I don't get my 1 is to 3 risk reward. That is the simple thought process. Now let's see this example. So gap down bull, gap down bull, basis, and a gap up rally. Okay, now what happened? This is my zone. Okay, so then price did lot of compression here. Okay, it further went up and came down, but since there are a lot of compression here, lot of confusion, lot of sideway movement, even if the price come to this zone here, I cannot take it to go up because these fellows may act as resistance. I want the journey to be clean. In the previous chart you saw excellent clean journeys. That's what I'm looking for. Do not touch trades where the price has not progressed far away from the zone. The next topic is about zone freshness. There's a lovely statement. If the price is far away from the zone, then the waiting is longer. The longer the wait, the better is the result. If you guys are very hungry, you know what happens? The more the food is delayed, the more hungry you get, and the more hungry you get, the food would be very tasty for you. Ultimately, patience is the key in price action trading. because we are retracement traders. We are not some breakout traders. We are not some moving average traders. We are looking for price to come at precise levels for us to enter. So the zone freshness is something which every one of you know. It's all about the authentic zones. Always look forward to trade only fresh zones, because fresh zones are high success rate zones, because they are the zones where price has never come again. The zone is formed, price has nothing has come there yet. And always look to trade only FTB. Mark my words, all beginners, all first time traders, do not even attempt 2TB. Do not attempt 2TB. Always focus on FTB until you get a grip on the subject. Always look for very high probable trades, because we are committed to all of us that if we with a 30% win rate also we can make money. Now we need to by default, even if we start tomorrow, our win rate should be more than 30 with all these rules in place. What does FTB stand for? First time back. What is 2TB? Second time back. And 3TB is third time back. As much as possible, avoid 2TB and 3TB as they result in further consumption of the pending orders. Why we say it will break? Because once it comes, the zone becomes weaker. Now all of you go back to our first module of investing, which is the first topic we learned in investing. We learned the yearly high-low theory. What are these yearly high-lows? Don't you think there are also some nice zones? When price always reacted, no. What do you mean by yearly high, 5-year high, 10-year low? What are they? They are the points where markets refers. Don't you think they are all zones? What was Gann telling us? Gann told us take an entry when the yearly zone is lit, when the double bottom is made a double top. What is that? It is all FTB only, friends. It was all FTB at what level? At a monthly level. I'm sorry, yearly level. What was WD Gann doing? WD Gann was trading FTBs at a yearly level. Finally, everything is around the same thing. The point of action. Do we get better risk reward at FTB? No, we get better win rate at FTB. Rewards we are not sure, but in FTB the success rate is high compared to 2TB. How many of you did not understand this concept? The WD Gann played the yearly high-low theory, and he was also playing at zones. WD Gann plays on zone. What are the zones? Now we are doing daily zone, weekly zone. WD Gann was trading at yearly zones. And all the so-called intraday traders play at the 5-minute, 15-minute, 30-minute daily zone. And that great man was trading only at yearly zones. And naturally, he used to get so much of phenomenal returns because his risk was so low. And now think how patient he was. Damn, he used to wait years for his trade to happen. So finally, we are all learning the same stuff in a different way. It's the same food packaged. Now let's say you all know this, price is going up, and suddenly price stops, it forms a base, and then price comes down. When the price comes down, there is an RBD structure, the rally, base and drop, and that is one fresh zone. And price falls, it goes up, and finally once it goes inside that zone, and that is called FTB, the first time back. The first time the price has come back into the zone that was created here, and the zone is fresh until it came to this point. And after that, is it fresh? No, it is a tested zone. And then what happens? The price reacts from that point. And I want every one of you to take only FTB trades. Why is that? Again, price can go back and form a 2TB and react from there. I am not denying that part. I am not denying that part. I am not denying that part. But the probability of success, win rate of 2TB is lesser compared to FTB. FTB will always have more reaction. And why 2TB is happening? Who is 2TB's father? FTB is the father to 2TB, and the master zone, this zone is the father to FTB. Okay? And there is a saying, somebody is telling that at FTB level there is no 1:3 trades. Are you guys sure? This is a short trade, friends. This is not a long trade. We are going up. Rangaji, can you see? This is my risk. 3 times of risk is my target. 1, 2, 3. Price came here, no? 1:3 you got, right? Why you are telling I didn't get 1:3? It's more than 1:3. It's 1:4 also. Okay? Rangaji, can you confirm? Can you accept there is 1:3? What else is this? It is FTB is nothing but a double top. 2TB is also triple top. Okay, 2TB can also work. But 3TB will never work because that is quadruple top or quadruple bottom. It will never work because it will bounce. And now remember this fact, friends. Triple top used to work extremely well for WD GAN, but because it is not a triple top on a lower time frame, it is on a nearly level. What is a triple top or a triple bottom on a nearly level? It is a point where extensive accumulation can happen. And that ban always played at yearly levels. He never ever bothered about daily intraday. And most of these GAN traders in India, they confuse people giving all the intraday stuff. Friends, GAN never did intraday. We are using GAN methods and superimposing that for intraday. GAN never did intraday. He only did positional trading. This is not an FTR. This is not an FTR. We will come to FTR concepts tomorrow in the next week. Rangaji, I still don't understand your question. Please throw your question again. Okay. Let me clear everything. I just wanted to re-explain the concept of zone freshness. And the sixth one is the gaps. And you guys already know gaps. You also know what is the purpose of gaps. They're unique price action behaviors which show significant momentum. And all price action zones are based on various news that comes up. As a result, the price booms from the existing levels. If the gaps are a part of the price structure, the 4 price structure, they are more powerful. Okay, so such zones really work very well and their power is very good. If the gap is high, the power is high. Yes or no? Okay, now friends, whether it is FTB or 2TB, my theory is very simple. I want 1:3 risk reward minimum. Okay, and there are many traders who take, take a trade, trail your stop loss. Why should I trail my stop loss? Why should I trail my stop loss? Tell me. If I am trailing my stop loss, my zone is, I am not confident on my zone, right? Any trader who trails his price action trader who trails his stop loss is a failed price action trader. If you are an equity, if you are a indicator trader, I agree. You are doing some moving average, breakout happened, some it went up. What does it mean? Many times price can go, comes back to your zone level and again bounce back, no? My theory is very simple. I have an entry, I have a stop loss, I have a target. That's all. Okay. Let's look at 1:3. 1:3 minimum if we achieve with to start with 30% win rate, we are in the game. To if we achieve 50%, we are phenomenally good compared to 99 traders across us. And if we can achieve that direction, if we move in that direction, nothing like it. And in the future, if your process increases, if you find better win rates, and if you're able to better see, remember this, to increase your win rate, you don't have to look for a longer target. Try look for reducing the risk. That is the theory. Going from 1:3 to 1:5, there are two options. One, raise the target. Two, reduce the risk. Let's reduce the risk. Okay, so all trade management stuff we will definitely discuss very detail in the last topics. So let's move ahead with the gaps now, please. Okay, and sir, if we can get the PDF of enhancers, it is beneficial. I'll summarize the enhancers and send it, no problem. Okay, now look at this. There was a drop, there was a base, and there was a superb rally. Okay, now all of you can argue and say, sir, arrival is good, departure is superior, but sir, number of bases are more. I agree, I'm not denying that part. Okay, here we are talking only gap, so I put that slide to put the gap. And if it was a strong momentum down, a quick small base and a sudden gap, it could have been a rocking level. Okay, the reason I put this stuff is to ensure that I explain the gap phenomenon and not anything else. Okay, now look at this. So gap bull, momentum bull, gap up momentum bull, gap up momentum bull. Two chotu bases, quick drop down. Okay, now this is a classic phase, and look at it, price came down. Now according to rule number 4, how far it traveled? It didn't travel at all. According to rule number 4, we don't even take this trade. Okay, but here I'm just trying to explain rule number 6, so I took this slide. Remember, the price came, went back, kissed and bounced, kissed and bounced 2 times and fell further. The beauty is, if you had taken the body to wick, this entry also would not have come. This kind of scenario many times happens. I am telling you, you will have that upsetting moments many times. Array, my zone was perfect, my entry price was perfect, I was waiting for 180, this bloody price came at 180.2 and it bounced up. Can't help it, friends. This is where you need God's blessing. Okay, there are times in life where, irrespective of extensive hard work, there you need God's blessing. And if there are any atheists here, sorry, I can't help it. You can give some logic to it. There are times it such scenarios happens to us, but of course this luck phenomenon will not take us longer. Okay, so gaps before we enter the zones is pretty nice, pretty nice. In case of gap, the stop loss will be more. No. Why will stop loss be more in case of gap? The gap, see, the stop loss cannot be more in gap because stop loss is based on the base. This gap has nothing to do with that, right? This gap is what? This is the momentum dropout, departure. So the gap should be 2. The arrival the gap is great, the departure gap is, there's nothing like base gap, because every gap is a momentum, no? Okay. Now the next one is, there's one question. In first slide of the entry, what will be in first scenario of this example, what will be entry? Entries, you have multiple entries. You can take the base, the top base to the lower bottom, or you can take the wick to wick, or you can even take the midpoint of the base. So there are 3 kind of options to take risk. Okay, it's according to your risk appetite. So no, I'm sorry, like this. Okay, or you can take this. Your proxy, your distal line stop loss will always remain the bottom, it will never change, or even further bottom. Whereas your proximal line can be this one, which is 50%, this one which is the body, this one which is the wick. Okay, your entry can be at multiple points. So if price comes down, it can bounce from here, it can bounce from here, it can bounce from here also. I don't know where it can bounce back. Okay, those who have the P1 entry might have low risk entry, those who have the P3 will have high risk entry, but there is no guarantee that price will come to P1. Okay, remember this fact. Price, if price is not coming, you will miss the trade, that's it. In all conservative entries, trade can be missed. That is universal, only God knows. Okay, so seventh one, how we will know it will gap up while taking entry? No, it will not gap up while entering, taking entry. After the gap up only we will take the entry. If there are, if there are more gaps, see, if there are gap downs while coming down, if there are gaps ups while going up, friends, remember we decided that the arrival should be strong, the departure also should be strong. If the arrivals are more gap downs, if the departures have more gap ups, what does it mean? They're all momentum only. So it is good, I don't worry about it, I'll be happy that there are gaps. Let me go back, people have some confusions here. No, 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 no. Here is a phenomenon. Price, there is a momentum drop, there is a base, there is a momentum rally. Okay, this is a momentum rally. So which ideally we have, sorry, we have a drop, we have a base, we have a rally. Now we are going to wait for price to come into this zone and then we will look for trade. Rangaji, is it clear? Okay. Okay. Mr. Shivaram Nayak, is it clear now? We are always retracement traders, sir. Sir, the moment I say here is the proximal line, here is a distal line, by default that I am going to take longs and shorts there. Yes, we are retracement traders. So our entry will always be on retracement. We are not breakout. I am not trading on breakouts. We will wait for the first rally and we will only take at the retracement. This is what? This retracement is nothing but our FTB. Please do not mistake on the basics. Mr. Shivaram Nayak, can you reconfirm that you understood this? The first rally, nobody can take trade because you don't even know that rally is going to happen, right? You don't know that rally is going to happen. We are retracement traders. When this momentum comes, drop based rally, after that only we are waiting to take the trade. I am not telling this momentum we will trade. Sorry. That then if I do that, I am Rajnikant. Breakouts can be fake outs also. So we should not know. Price action traders always trade for pending orders. This is a universal rule. Price action traders should wait for the points where there are pending orders. Mr. Shivaram Nayak, if you can reconfirm you understood my statement, we will move ahead. Okay, fine. Going forward, I will tell every one of you whether I am taking a long and a short. So generally, I am not telling long and short because it's very clear that whenever I mark a zone, my entry is always at the proximal line, my exit is always at the distal line. And if I waiting for the price to come down, I have to take a long. If I'm waiting for the price to come up, I have to take a short. Understood, sir. Understood, sir. I understood. I'll going forward, I clearly tell long and short. I thought my proximal and distal line theory itself is clarifying which direction I am going on. No problem. We can do that. Next. Okay. So one last statement. So in first scenario of this state, what will be entry? Okay, that we have already clarified. That's a very old question. There's an interesting question from Gaurav sir. For an aggressive entry, can I take future long and buy a put for insurance if my target is much more? Yes, you can do that. But how do you know that your target is much more? What is a guarantee that much more will come to you? Always entries are in the zones only. I will never trade outside the zones. I only trade in the zones. And I will take trades only if I am confident of 1:3 risk reward trades. Never trade against a higher time frame. If your LTP, if your latest traded price is close to the higher supply zone, never go long. Suppose you got a strong zone. Suppose you saw all enhancers have passed, all zones are superb. But the very next moment you have a strong supply zone at a higher level. Suppose you are trading on a 5-minute candle, you suddenly see a 15-minute supply. You might see hourly supply. What is the point? It is like a small baby elephant going and attacking a bigger elephant. No, you can't do. Don't go hit your father and grandfather. They are stronger than you. Same thing, if your LTP is close to a higher demand zone below, don't try to short. Remember this fact, every zone is not a tradable zone. And I'm sure all of us had discussed about this on higher time frames. Once we do practical example, I will go zone multiple, deeper inside multiple zones and then show you how it can support you. Since we are retracement traders, are there any websites which provide real-time and institution order flow? There is one Bloomberg software which cost about 6 lakhs. I heard they will give you limit orders of the next 200 levels. Next is, I guess these methods are more specific to future or delivery trades, not for options. Why do you think so? When the price comes to your zone, demand zone, go and buy a call. If price comes to a supply zone, go and buy a put. Or if a price comes to your demand zone, you sell a put. If your price goes to a supply zone, you sell a call. Who is stopping you? We have not gone into the deeper options concepts because there are many beginners here. I do not want to confuse them. And finally, the best of actions happens at nested levels, where there will be multiple congestion of zones. There is a big zone. Inside that there is a weekly zone, and I have taken a daily zone. And see, suddenly this is an example which we already spoke. There is a base. At this base, price broke out. Okay, and remember, this friends, price didn't even come to this base level because it came at a monthly zone and it has bounced, sorry, weekly zone, and bounced up. It has not even come here. I'm still waiting. It only came into my intermediate time frame. Are you guys getting it? This is my higher time frame zone. This is my intermediate time frame zone. This is my lower time frame zone, and I am trading only at the lower time frame. Okay, and I am still waiting. Price has already reacted here, and now next, if price comes here, I am looking forward for the trade. Okay, so nested zones are very good zones, and we trading at nested zones will get backing of everyone. It's like family. The father, grandfather, and your grandchild, all of you sitting in the family and make a joint decision that we will do something together. Okay, that's when you have blessings of your father and grandfather. See, look at me. I came into trading against the wish of my father. I don't have that support from my family. Imagine if they supported me, how confident I would be. I would have burnt a lot more money before. Which is significant? Daily, weekly, monthly, who is stronger? Your grandfather is bigger than your father is bigger than you, because they created, your father was created by your grandfather and you were created by your father. So who is the boss of the family? God, grandfather. Higher time frame is the big boss, intermediate time frame is the next boss, LTF is the lowest boss, and when all the zones coincide, there is strength. So we are not going to the concept of scoring. Okay, now we have studied almost 8 enhancers. Now we will remember these guys and we will take trades. We will not really go put a ranking system in place. Okay, that will be all painful process, Sridhar Swami. So it's all, these concepts should automatically imbibe in us as time progress. Of course, initially we'll have to keep track of all these things. As time progress, by default, when you're looking at chart, you should suddenly make out. It's not that you get a checklist. Okay, rule number one pass. Initially, yes, the first 10 trade, 20 trades, 50 trades, you will have this problem. Okay, as time progress, you will automatically know, hey, arrival is bad, departure is bad, hey, zone is more bases, the lay base is an ERC candle, too much of risk. Hello, the target is not a good idea because there is congestion at 1:3 level. These kind of thoughts should instantly come to you as time progress, and your DNA will talk about that. Okay, so one of the method is, friends, OTA, online trading academy, they do what they do is, there are different enhancers, right? So 1, 2, 3, 4, 5, 6, 7, 8 enhancers are there. What they do, they give points. Okay, good base, 1 point given. Okay. Oh, I'm sorry. I'm really sorry. I'm on a wrong slide, friends. I didn't even look at that. I didn't even look at that here. Okay, so we studied all those 8 parameters here. These are the summary of the things which we learned so far as far as price action 11.1 learnings from yesterday and today are concerned. Okay, so it's all, these are the 8 stuffs we learnt. We superimpose all these 8 stuffs and we will look for trades. And once you come back from break, we are getting into the concept of what can I say, the FTR. Okay, the FTR theory we will get into. So that is not the FTR, I'm sorry, the flag limit zone concepts we will learn along with some practicals. Okay. So what happens in OTA, they what they do in OTA is, we spoke about 8 enhancers, right friends? So what they do for all 8 enhancers, they will keep giving marks. Okay, first one 1 mark, second one 1 mark, third one 1 mark, and keep giving rankings. Okay, so they'll, for each item there'll be 3 points. For example, in a base there are 3 kinds of base: a worst base 1 point, the best base 3 point. Next, departure, the best departure 3 point, worst departure 1 point, and then they stand adding up everything together, and if you get more than these many points only, you should take a trade. Okay, that is not a according to me, it's not a great way. These 8 points, take a printout, put it on your system. Okay, make a logical judgment, make a logical judgment whether is it a right time to do. Okay, see, you should not, the person who reacts in a matured way, a responsive guy is is more relevant when it comes to trading, particularly in intraday trading. Friends, your reaction time should be faster. Okay, so all these 8 concepts, you remember, we learned 1 2 3 4 8 concepts in total, and on the 8th concept of key enhancers, we learned 8 enhancers in total. Put all of them in place. Okay, these are the building blocks which we would use. Which one we will use when, we don't know. As the situation offers things, we will start using one by one. Okay. Now, so if there are no questions, we will quickly break for coffee. Okay, now the time is 11:30. Sorry, I thought we will finish off in 1.5 hours, and this concept went 2 hours. Not a problem. We will come back at 12 p.m. sharp, 30 minutes from now, and we will go on till our lunch period and finish the flag limit concept. And post lunch, we will get into the practical examples. Okay, we will go deeper with practicals post these sessions. And remember to make a list of all these 8 concepts and all the 8 enhancers of the 8th concept, and put it in front of you. And there will be 5 power patterns we would be learning in the next subsequent sessions. And next session we will have our first power session to learn and discuss, and with that we will take off with actual trades. Okay, thank you very much friends. I am signing off right now. I look forward to connect with you after the program, and see you after lunch at sharp 12 p.m.